Hello everyone and welcome to another video review. Today is Thursday, May 5th, 2022. This is the day after the Fed interest rate announcement. So let's take a look at the Forex calendar. However, we are going to go back to this event as often as we can. So, what do we have today in the calendar? The first thing is we got some data overnight. Markit services PMI from China disappoints the participants, 36.2 versus 40.1, and the previous reading was 42 points. So, a rather deep decrease in services PMI in China. What do we have here during the London session? PMI services and composite PMI from the UK scheduled for release at 10:30. However, this is not the main event of today, because the main event of today is Bank of England interest rate decision and the MPC official bank rate votes and monetary policy summary. All of these events are scheduled for release at 1 p.m. The Bank of England is expected to hike from 0.75 to 1% today, so we will see how about that later on, and we should expect a higher volatility, of course, during this period of time. During the New York session, we got the challenging job cuts, unemployment claims, and continuing claims. All of this data are from the US labor market. And then at the end of the day, we got the BOC Deputy Bank of Canada Deputy Governor Lawrence Tremblay will give us speech, and at 4:30 we have the natural gas shortage change. So I think the main event of today will be Bank of England interest rate decision, and we are going to talk about it for sure. But first, let's go to let's start with the British pound. Daily time frame chart of the British pound is, of course, showing us the signs of a weakness, very big weakness. However, as you can see here, we tested the 61% of the Fibonacci retracement of the whole post-COVID rally at 1.2503. Excuse me. The low, however, was way below this level, 1.2410. So please notice the fact that we can still test the 1.2254. However, this technical support is very important on the British pound chart. So let me show you why. This is the technical support from the 2020, and if it's broken, then the next technical support is somewhere around the level of 1.2091, and this is low from the 2020. So 61% of the whole post-COVID rally violated, retraced, very deep and very strong and powerful selling pressure from 1.3 to 1.5. A lot of bears were involved in that selling, of course. Let me just remove some of the lines that we don't need anymore. Let's just leave the most important ones and the old ones. So where do we have the technical support? Should we leave this one? Yes, we should leave this one. However, this one is now the resistance, 1.2677. So let's just stay with this one. And what do we have here? Well, it looks like there isn't much until this zone here, until this zone between the levels of 1.2976, 1.2997. Basically, this is all about 1.3 level. So let's just switch the coordinates. There you go, 1.3 level. This is the narrow zone of 25 pips, which is very strong, and it has not been tested yet. So if there is a bounce, we should rally way higher. The market conditions extremely oversold, now bouncing back up after 61% of the Fibonacci retracement has been hit. However, as you can see here, those levels are still not really the one that we want to see very soon, because just take a look at this chart. Bounce yesterday after the Fed, right? So the pound reacts on the Fed. Slide of the consolidation here in the very narrow range. So what do we have here is kind of a parallel channel here that market is trying to establish. However, if we consider this move here as a pole of the flag, we have the pure textbook example of the flag pattern, and this is a bearish flag. This is a bearish flag pattern. So if there is even some sort of the increase in the volatility, and it's expected to be here on the British pound, then we can break above 1.2677. We can go even towards the long-term channel lower line. However, it all might be just temporary. It all might be just kind of a market behavior before and just after the interest rate decision. Please take a look here. We already trending a little bit lower. However, we know very good about the fact that the market likes this kind of a behavior ahead of the main event. So please notice the fact that despite of the recent low here, 1.2413, recent extremely oversold market conditions that are now bouncing, the bears are still in charge of this market. So the short-term bounce might be very quickly faded, and then the bearish flag might appear. What is going on the British pound to the Japanese yen? It's all according to our plan. This is our old scenario. Let me just zoom out for you guys to see what is going on. No, I didn't mean to move the whole channel. What I wanted to do, really, let me just adjust the channel to the newest data. So what do we have here? Look at this. We got a breakout, we got a test, we got another higher high, we got a test. What will happen now? This level here, 163.74, is the technical resistance. It's still the technical resistance for this market. But if we take a look back in the history, we can see that this is the high from 2016. So it's very old kind of a high. There isn't much here until 174.83. This is the next technical resistance from the beginning of 2016. So the British pound is on the highly elevated levels. We will leave this technical, of course, we will leave this technical channel here. This channel is still valid. Market recognizes it, and market likes it and trades ahead of this and trades accordingly to this channel. We're gonna build a little bit of the zone here. There is a zone between 163.74 and 164.62. This is very important zone, because if it's broken, then the next target will be 168.44, the high from the 20th of the April. What else do we have here? This is our top. We should pay attention to this level right now on the British pound. This is resolved. There is some sort of the technical support. Let me just change the line and put it here, and of course the rest of these levels here are valid technical supports as well. So let me just change the color here for you guys. The first level is 157.75, the second is 158. So we don't need that we don't need it that tight anymore. I prefer to move this one here for the temporary support, 159.59. The other support, as I moved it, was at 158.24, and the other one is at let's say 157 and 79, 157 and 79 is the technical support. How much did we retrace? It looks like we retraced like 50% of the last wave up. This is the last wave up, and we retraced, I think it's going to be a kind of a 50%. maybe maybe not. Let's see. This is 50% exactly. Look at this precision. 50%, 159.64, retraced, bounce. So here on this market, we still have, of course, the bearish divergence. I bet you've seen this one here. However, no, this is not divergence. This is correct. This is correct. This is lower low. This is sorry, lower high. This is higher high. Not a problem here. No divergence yet. Okay, so let's remove it. I thought I'm going to be quick with that and mark it. However, what's happened is a normal correction during the uptrend, so we should expect another wave to the upside. But first we need to break above this zone here, this big supply zone between 164.74 and 164.62. So British pound, two most important markets for the British pound were done. What is going on the US dollar index after the Fed interest rate decision, after the hike? Please notice the fact that 1.22% correction is the recent one, breakout higher. The high was made at 103.90, so this is actually the higher high. Let me just move it here, 103.90. I bet I'm going to move it kind of there you go. This is our very strong technical resistance because it's made on the extremely over during the extremely overbought market conditions. So those level has not been seen since 2015 or something like this. Please notice the fact that the recent move to the downside in terms of the price range is already minus 1.48. okay, let's say it's a little bit more, 1.53 even. So it's kind of a big pullback, bigger than this one, and that's it, bigger than this one, almost equal to this one. So if we take a look from the bigger perspective, we can see that something is going on here. After the Fed decision, the market, the US dollar index is going down. It's not going up as much as it used to be. Why? Because markets discounts the future, not the past. So this kind of a move up was all about the Fed interest rate hike, interest rate decision, which was very highly anticipated. And now after the fact, US dollar is being sold across the board. So we should expect more bounces on euro dollar, on British pound after the interest rate decision, on British pound to euro dollar, sorry, on British pound to American dollar. It's called cable, of course, and we should see more pullbacks and maybe even a rally or short squeeze on American dollar related pairs across the board. So please be prepared for that as well, because the consequences of the Fed's decision will be almost immediate. So let's wait for the Bank of England interest rate decision. We are prepared, we got our scenario, we have our charts ready. But that's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.